Here's what Wall Street just priced in. Micron announced it's pouring billions more into United States chipmaking, and the stock jumped 7% in a single day. But that's not the surprise. The real story is what that jump tells you about who's winning the global chip race. Micron makes the memory inside basically every computer, phone, and data center on Earth. Think of it this way: if a chip is the brain of a device, Micron's memory is the notebook the brain writes in. Without Micron's memory chips, your laptop would forget everything the moment you turned it off. Nvidia's fancy AI chips, worthless without somewhere to store the data. Apple's processing power, blind without memory. And now Micron's betting billions that American factories, not Taiwan, not South Korea, are where the world's memory gets made. That's a change. For decades, memory chips came from Asia. The fact that a United States chipmaker is doubling down domestically and that investors are cheering shows you something fundamental has changed about how the world thinks about chip sovereignty. This is where the real tension starts. But here's what most coverage is missing. This isn't just good news for Micron shareholders. It's reshaping where the next trillion-dollar tech ecosystem gets built. To understand why this matters, you need to know the last 30 years of chip history. After World War II, manufacturing moved offshore because it was cheaper. By the early 2000s, Taiwan and South Korea had captured roughly 80% of the world's memory chip production. The United States, which literally invented the integrated circuit, outsourced almost everything. That worked fine until 2020, when COVID hit and the world ran out of chips. Suddenly, every car factory, every computer maker, every consumer electronics company realized they'd built their entire supply chain on hope. Hope that nothing would go wrong in Taiwan. Hope that shipping containers would keep flowing. Hope that one geopolitical crisis wouldn't snap it all. It did. The chip shortage lasted 2 years and cost companies trillions of dollars in lost sales. Car makers idled plants. Gamers couldn't buy graphics cards. Apple had to limit iPhone production. And everyone realized the same thing at once. This is stupid. We shouldn't be betting the global economy on one island's factories. That's when governments woke up. The United States government passed the CHIPS Act, essentially saying, we're going to pay companies to build factories here instead of overseas. Billions of dollars in subsidies and tax breaks. It's industrial policy, pure and simple. Micron's new investment. That's them cashing in on that bet. And the market's saying, yeah, we like this direction. Here's where it gets technical, but stick with me because this part matters. A memory chip is brutally hard to make. The transistors inside are so small, some approaching atomic scale, that fabricating them requires machines that cost hundreds of millions of dollars each. A single wafer fab, that's the factory where chips get made, runs into the billions to build and operate. Micron doesn't just make chips, they make NAND and DRAM memory. NAND is what stores your photos, documents your entire digital life. It's the memory that persists when you turn your phone off. DRAM is the working memory, the stuff your device actively uses right now. Every app running, every browser tab open, all of that lives in DRAM. Your phone probably has 8 gigabytes or more. When Micron makes NAND and DRAM, they're making the foundation that everything digital runs on. And here's the thing, the machines that make these chips. Almost none are made in the United States anymore. The equipment comes from Europe, Japan, the Netherlands. So building a United States fab isn't just about the factory. It's about creating an entire ecosystem. You need engineers, suppliers, logistics networks. It's not something you do in isolation. Micron's commitment means they're building new fabrication capacity right here, and the 7% stock jump means investors think that's a winning bet. But here's what makes this particularly interesting. Let's talk actual dollars. Micron got roughly $3 billion in CHIPS Act subsidies. They're now committing tens of billions more of their own money over the next decade. The United States government sees it as money in the bank, safer supply chains, domestic jobs, technological resilience. Compare that to what Intel's doing. Intel received the largest CHIPS Act award, approximately $20 billion, to build new fabs in Arizona, Ohio, and New Mexico. They are layering their own capital on top. Samsung, South Korea-based but building United States capacity, got their own subsidies too, though smaller. TSMC, the world's largest chip manufacturer, is in Arizona with government backing. This is coordinated industrial policy. It's not organic market forces. It's governments worldwide saying simultaneously, We need to own this technology. The European Union deployed its own subsidies. Japan did this. South Korea's accelerating investment. Everybody's suddenly in the chip-making business again. The concrete effect: United States factories will have way more wafer production capacity. That means shorter lead times, lower shipping costs, less geopolitical risk. If there's another pandemic, another crisis, another supply chain disruption, computer makers won't get caught flat-footed. The chips they need will be made nearby. And that's why the market cheered. Here's why things get complicated though. Micron jumped 7% on this announcement. Intel, Microsoft, Apple, they didn't move much. Why? Because the market's already priced in this change. Chipmaking is becoming a quasi-governmental function. It's not pure capitalism anymore. It's strategic infrastructure like airports, highways, or power grids. That changes the investment math completely. When a government's subsidizing your factory, your returns get suppressed. You can't charge what you charge in a fully competitive market because politicians will step in. You can't offshore your workforce because that defeats the whole point. You can't shrink when demand drops because governments are counting on those jobs. Micron's stock rose because memory is hot right now. AI training eats absurd amounts of memory. Every data center getting retrofitted with AI chips needs memory to go with it. It's a supply and demand bonanza. But here's the comparison worth making. Micron rose 7% on good supply news. A decade ago, that'd be triple or more. The gains are muted because investors understand this is now a subsidized, government-influenced business. Doesn't mean it's a bad investment. It means it's a different kind of investment. You're betting on industrial policy holding steady. You're betting the United States government stays committed to chip sovereignty. You're betting demand for memory keeps growing. Those are probably all good bets, but they are political bets, not just technical ones. Intel, TSMC, Samsung, they're making the same calculation. This is where we build now. If Micron succeeds and builds world-class fabs on United States soil, what actually happens? The obvious answer is good, secure supply chains, manufacturing jobs, technology leadership. But zoom out and you're looking at a fundamental restructuring of how global tech gets made. For the last 3 decades, the game was simple. Companies designed in California. They manufactured in Taiwan. They sold everywhere. Maximum efficiency, maximum profit. But efficiency required trusting complicated geopolitical arrangements. It required betting that political relationships wouldn't break. After COVID, and with tensions rising between the United States and China, that bet started looking riskier. Now you're entering a world where there's United States memory, European memory, maybe Chinese memory, Japanese memory, parallel supply chains, redundancy everywhere. That's more expensive. Wafer fab in Iowa costs more to operate than one in Taiwan. Labor's higher, energy's different, regulations are tighter. That cost difference gets passed to consumers or absorbed in lower profit margins. The flip side is resilience. Your device gets more secure to make domestically. Your data center doesn't depend on shipping through contested waters. Your country has actual manufacturing capability again, not just design teams and marketing. That's not nothing. For consumers, it probably means slower price declines for memory-heavy devices. Your next laptop might not get cheaper as fast, but it'll be more secure, more sovereign, less vulnerable to supply shocks. That's a real trade-off worth debating. If you're watching tech news regularly, here's how to think about announcements like this one. First question, who benefits? Micron shareholders in the short term, yes. But ask who benefits long term. Workers building fabs? Probably. Tech companies with stable supply chains? Definitely. Consumers? That's complicated and depends on what happens next. Second question, who pays? Governments. Taxpayer money is essentially subsidizing these fabs. That's a real cost. It's just not counted the same way a stock price is. So when Micron rises 7%, that's investors being happy. But remember that their factory got partially funded by your tax dollars. Third question, what's the alternative? The alternative was letting Taiwan and South Korea remain the only places serious chip manufacturing happens. The alternative was repeated supply chain crises. The alternative was losing the technical expertise to make advanced chips at all. From that angle, spending tens of billions of public dollars on United States fabs looks economical. Fourth question, what could go wrong? Execution risk is enormous. Building these fabs on schedule and on budget is incredibly hard. Attracting experienced engineers to factories in Ohio requires real incentives. Competition from subsidized fabs globally could still squeeze margins. Demand for memory could slow if AI hype cools down. There are ways this doesn't work out. The point is, this is good news, but it's complicated news. It's not a simple up or down. Here's what Micron's announcement actually tells you. The era of outsourced, purely offshore manufacturing is ending. Not completely, not tomorrow, but the trend is shifting. Every major tech nation is now building its own advanced factories. That's a bigger move than a single stock price can capture. For your life, watch 3 specific things. 1. Memory device prices will stabilize more than they'd otherwise. You won't see dramatic crashes, but you'll see steadier availability. 2. United States tech manufacturing will become a regular political issue. If a factory gets delayed or a fab struggles, you'll hear about it not just in business news, but in regular news. It's infrastructure now. 3. The companies that navigate both the subsidized and free market sides of chip manufacturing will win. Micron's positioned well for this. So is Intel, TSMC. Playing an incredibly tricky diplomatic game to maintain United States access while staying connected to Taiwan. The stock jumped 7%, because investors see a company that's positioned well in this new world. That's probably right, but you should be thinking about this as bigger than one company or one stock chart. This is geopolitics, industrial policy, and technology all colliding. The next 5 years of chip manufacturing are going to reshape where technology actually gets built. Stay curious about how this unfolds. Follow for daily AI news, and I'll see you tomorrow.